Hello everyone, welcome back to my channel. So as promised, this video will be about the wrapping up for week number 2 of our Road to 200k challenge. This was a quite challenging week, I should say. As we all know, markets went into a complete meltdown on Monday, but even though on Tuesday and Wednesday markets recouped a little bit some of the losses, still there was quite a lot of volatility, and just to give you a little bit of an overview what happened over the week. Even though during Tuesday and Wednesday markets, as I said, rebounded a little, the AAL, the American Airlines stock, which is of course right here, stabilized after the losses from the end of the previous week and Monday, and Ford Motor Company climbed a little bit, but even though, as you saw in the previous video, I had sold puts on American Airlines and Ford Motor Company, both puts on, if I'm not mistaken, on Wednesday they went down to 1 cent each. So I decided to buy them back, because of course there was no reason for me to wait until yesterday, Friday, to let them expire. We could have that collateral money applied elsewhere to get some more money. Also, in the meantime, on Wednesday, Lyft, the stock that I have right here, released is Q2 second quarter earnings, and it was a quite strange situation, because even though revenue and earnings beat the analysts' expectations for the second quarter, the stock price still crashed down around 15%, because during Q2 the gross bookings, keep in mind that this is a transportation platform, and so the gross bookings during the second quarter came below the analysts' expectations, and also the guidance for the expected bookings for the coming months, which of course are provided by the company itself, also came below the analysts' expectations, and so as a result the stock crashed around 15% in a single day, and as a result now it is, at this point, it is below $10 a stock, and so there is nothing we can do at this point, but we'll get to that a little bit later on. I decided to use the funds, as I said, from buying back the American Airlines and Ford Motor Company puts, to sell more puts on Lyft. And why is that? For the reason that this is going to be a focal point in the next coming weeks, which is basically to try to lower the average price of the stock that I already have. And so if this will make it easier to sell the entire amount of Lyft stock easier, basically, because if I buy more Lyft stock at a lower price, the average cost of my holdings will lower, of course, and so it will be easier for me to get out of the stock, selling the entire stake without having a realized loss. So it will be much easier to break even, or perhaps even having a capital gain. Nonetheless, as you can see, as you will see in a few seconds, the call on Lyft that I had at the beginning of the week, the call fell down, of course, because the price of the stock fell down, and so when the stock price falls, the calls lose value. The call on Lyft that I had fell down to 0.01, but I decided not to buy it back and sell another call at a lower price, because Lyft stock is much more volatile than American Airlines and Ford Motor Company stock, and so if I do that, I will have to set the strike at a lower price than my price of acquisition, which was 14.5, And so it will be much more likely that the call will be assigned, it will expire in the money, and so I will realize a capital loss by being forced to sell the stock at a lower price. And so I prefer to let it go to maturity, which was yesterday, to see if there is any another reasonable call for lift at the same price that I bought the shares. So this is something that I will have to assess next Monday, when I'm going to place another call, sell another call on lift stock. And so this is the way it's going to be when Monday comes. Likewise, HIM stock right here, it crashed down 12% on Monday because it released its earnings, and it continued to fall in the following days. Once again, even though HIM's earnings and revenues beat analysts' expectations, the guidance for the sale of weight loss devices came below expectations. And even though this is only a small portion of HIM's business, investors gave a lot of emphasis to that fact, and as we can imagine, more emphasis to that particular detail than the earnings and revenue performance. And so because of that, the stock also came crashing down in a big way, and so currently is below 16, as you can see right here. And so also just like it happened for Lyft, I also had calls sold on HIMS, but because of the high volatility of the stock, I decided not to buy back the call, and I decided to let it go to maturity, because of course my average price is between 22.5 and 23.5. My average the average cost, the average price that I paid for the stock, and with a price nearly 16, there are no reasonable calls for me to sell and to roll over the position. And because of that, I decided to let it go until maturity. Now on Monday, again, I will have to see what kind of calls and which call I'm going to sell on HIMS to make sure I get some return out of the holdings themselves. And so now the plan is to sell puts on these stocks, Lyft and HIMS. I will also consider doing the same to Ford Motor Company and also American Airlines over the coming weeks, to make sure that I can bring their average price of acquisition down, and so then by doing so I will be able to get out of the entire holding without a capital loss. On Thursday, even though, as I said, I had sold some puts on Lyft from the proceeds from American Airlines and for options, but because on Thursday the Lyft stock rose around 11%, the puts that I sold, which I remember had a strike of 9, so I was obligated to buy the shares at 9. The puts that I sold quickly came down to 1 cent. So yeah, I just bought them back because the likelihood of their being in the money and I would be forced to buy the shares at $9 were extremely unlikely, and so I decided to buy those back. And then I used those funds to sell puts on HIMS with a 14.5 strike, but even though of course there was not a very low likelihood that they would be exercised. It didn't happen. Those puts also expired worthless yesterday, and so I could not buy additional HIM stock in order to lower my average price. So this is going to be the game plan for the next few weeks, selling puts on all of the stocks that I have, the most problematic ones, which is HIMS, Lyft, Ford Motor Company and American Airlines, to bring down the average price, and so being able to sell calls which will eventually be triggered, be assigned, so that I can sell the entire stake. Also, as you can see right here, during the week, I managed to sell some puts on Pfizer, 2 puts actually, and they ended up being assigned to me because the strike was at 29. The stock finished the week at 28.58, and so I was assigned 200 shares, which is not a huge problem because this is a quite good stock. It has quite a lot of value into it, and so I'm not worried at all. Estilode is another example. The stock also came crashing down during the week. It's way below the 98 average price that I have currently, but nonetheless, because it is also a very high quality stock, I am not that concerned. Of course, it's at a much lower price, but this is not the priority for me at the moment to address. I will sell calls on them for sure, of course, because I need to get some return out of the holdings, but this is not the priority for me because I know it's a very high quality stock, and so if I will keep it for the long term, I'm very, very confident that it will continue to thrive and will continue to give me some good returns. And so the priority is, for now, is Lyft, HIMS, Ford Motor Company, and American Airlines, of course. So let's just see how the scoreboard is at this moment. Let's just start at the beginning of the week. As you can see right here, I have all the trades set up. Let's see how each of those came out to be. So I still have, of course, these Lyft calls, as I mentioned. Of course, they expired yesterday, August August the 9th, and so this is the number of days that I held I had sold that were between I selling the call and its expiration. As you can see right here, the Lyft calls expired worthless, as you can see right here, and so there is nothing to add except zeros here because I did not pay anything, and so the call simply expired worthless. All right. This one, the 4 calls are still ongoing, even though they are a very low price, but they only expire at on the next week, and so they will continue to stay in my portfolio. They are at 2 cents, but yeah, as you can imagine, I will wait until they are until 1 cent to buy them back and roll over the position. The same goes for the American Airlines call here, because the price in which I sold the calls is very low. It only makes sense to either to let them expire or buy at 1 cent, because otherwise you won't get any meaningful return out of the calls. And so coming back to our trades, let's see what I did during the week. So these are trades that are on Monday, and so yeah, this is it. As you can see here, starting, yeah, because yeah, the Pfizer's puts that I sold took place on Monday, and so here are the 4 puts that I bought back at 1 cent each, and so the fees were 105 and 14 cents. So this is 1.19 that I bought these putbacks, as you can see right here. And so let's see. This is the one. So I bought those back at 0.1 and 1.19 here, and I simply close the position. This was on Wednesday, August the 7th, as you can see right here. So let's just push it through here, adjust the date, 7 here, which was quite a nice return, as you can see right here on annualized terms. Yeah, so moving on from here, I use the proceeds, as I mentioned, to sell 12 puts. Also, I should take care of this as well. The American Airlines. Let's do this first. The American Airlines put was also on this date as well. As you can see, they were also bought at 1 cent. The commission was 2.67. So 2.67, and the position was also closed. All right. And then I used these proceeds to also sell, as you can see right here, 12 puts on lift stock with a strike of 9. And so this, because this took place during the week on Wednesday, I must add them to here, right here. 7, they expire on Friday, and here it was lift, right? It was a cash covered put. The strike was 9. Those are 12 contracts, and I managed to sell those at 8 and 5. So 8 of them were at 8. So we need to calculator here. So it was 8 times 8 and plus, these are 0.2, so we divided by 12. So this is an average price of 0.07 here. 7. The total commissions of this were 4.16, so this is 4.4 plus 450 is 8, 40 is 56, so this is 856, which is a quite expensive commission. I was not expecting to be that much, but of course it happens. And then immediately the next day I bought them back because of the fact of the stock, as I said, just came crashing down, and so basically there was no sense for me to keep the stock, so I just bought them back here. And as you can see here, I bought those back at 1 cent. Actually, I had a credit for this, so this is 135, 235, 232. Yes, this is 232. It's a credit of 232, which is actually quite nice. Again, I have no idea why this happens, but it's always very good. This position was closed, which was also a very nice return just for 1 day of work, as you can see. And now moving on, we are already on the trades on Thursday. Here these were bought back, and then, as I mentioned, I sold puts on HIMS, 7 contracts, as you can see right here. And so on Thursday here, they also expired yesterday, there were 7 contracts. They expired yesterday. This is HIMS, and this is a cash covered put. The strike was 14.5, and yes, yeah, those puts expire worthless, as you can see right here. So yeah, expire worthless, right? And I received for these, when I sold them, 6 cents each. Let's put this a little bit down, and I paid for it $3.85. So 3.85. This simply expired. Just save, and let's see the rest. Now, as you can see, I had to buy Pfizer shares, all right, because they hit the strike. I had to buy them at 29, so these shares were assigned, and here, right. So basically what I just do here, I can't remember if this ever happened during my recordings, but what I usually do, and this is just an indicative value, I don't give too much importance to it, but basically what I do is looking at the price after closing, so it's 28.58, all right, I had to buy at 29, so basically this is a difference of 42 cents. And so what I'm going to do is just pretend that I had to pay to close the position 42 cents on the stock. All right. This is nothing significant because, as you can imagine, when the markets open on Monday, the difference will be lower or will be larger. So this is just an indicative number. What matters to me is the price that I bought the stock, which was 29 euros. So when I sell calls on this stock, and I'm going to sell calls, the strike price will be at least 29, all right? But because the stock price currently is very close to 29, to the strike price, to the price I bought the stock, I will strongly consider setting the strike a little bit higher, like 29.5 or even 30, so that if the stock is sold and the call is exercised, I will get a capital gain. All right, and so this is something that I will seriously consider, because if I set the strike at 29 and the calls are exercised and I have to sell the stock, I will break even in terms of capital, but I still get a profit because I received some premiums, the premiums of the puts and the premiums of the calls. But it's always nice to have a capital gain, and so if I feel that it's worth it, given the premiums that you get and how the market develops on Monday, then I will go for it, because of course it makes total sense to do so. All right. So moving on from here, and so let's go back to the trade page, and as you can see, the Pfizer puts were assigned. This call on Estée Lauder expired worthless. All right, so this call on Estée Lauder does not have any value anymore, so it expired worthless. As you can see here, it simply expired. And the same happened with the other ones. So the Comcast puts as well, as you can see, also expired worthless. So I simply pocket the premium here, right? It simply expired. And let's see the rest. The HIMS call, we already take care of it. And so this yeah, the hymns and the lift calls also expired worthless, and so this expired worthless. This was of course a call that I would love for it to be exercised, because that would allow me to sell the shares at a much higher price, but of course that was not meant to be, and so is life, and we'll have to work a little bit harder to get rid of those shares, and let's see what happens. So basically this is our scoreboard for the moment. Of course, even though as you can imagine the week went pretty badly for us, because of course the unrealized losses are much more significant on the stock that we own, but of course these are unrealized unrealized losses, so they will only become realized if I sell the shares. In terms of the gains themselves, or rather the trades that I managed to realize, if I just do a quick calculation here just for the week, and I'm not counting on the gains which were from but we can do so. I can add back here the other ones, for example the lift call, which is in here. This is just an hypothetical calculation, alright? This is just for the purpose to see what it just happened in terms of the trades, which I think, yeah, this is the only one that was here behind. Yeah, the rest is all settled. So as you can see, during this week we managed to realize in profit $649 for the week, which is of course very good. This one, of course, is a loss that is currently pending, I would say, because I bought the shares. Let's see what happens next week. Of course, I will try to sell back or at least sell the calls, and if exercised, I will sell back the shares, and this loss will be offset. But for the moment, is a quite nice profit for the week, and yeah, let's see what happens. So for now, yeah, basically this is it. And I will have to make some adjustments here to the scoreboard, because some of these calls will offset some of the prices that are still hanging on in here. So basically I will the premiums that I collected will lower the potential value at which I can sell the shares and breaking even, but this is something that I will make off the recording, because of course it's a more strenuous and time-consuming work, so I will not bother with this. But so far this is it for the week, and I will come back Monday at the end of the day to show you the trades that I will make for week 3. So until there, have a great weekend, guys, and thank you for your attention, and feel free to like the video and leave any comments below and subscribe to the channel. It's going to be a great adventure, and I'm sure that eventually we will succeed in this challenge. So fingers crossed, and let's go for it. And yeah, have a great weekend.